Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
We're going to hear about a couple of companies with exciting stories in a couple of different industries with our strategists Kevin Cook and Benjamin Rains here. Kevin, we're going to start with you. You have a pharmaceutical stock.
Yes, and before I get to it, I just want to remind our viewers that the last time that Ben and I appeared on this program, we gave you a couple of great stocks. He gave you Roku, and I gave you the Trade Desk, both up, at least 25%.
Oh, yeah.
So,
but as we know, past performance is no guarantee.
But we're going to see if we can get a repeat here. All right, GW Pharmaceuticals. They have the first FDA-approved cannabis-derived drug.
Okay.
So cannabis is huge, marijuana stock, CBD, but this is the first actual pharmaceutical that the FDA has put their stamp of approval on, and it's to treat two rare forms of childhood epilepsy.
Okay.
Explosive growth. The drug was just approved, just went to market in November, and the sales are just launching here. So this is on its way to becoming a blockbuster drug. I'm going to tell you some of the story, and then we'll look at the hard numbers. If you look at my screen here, this is an investor presentation that GW did for investors, obviously, in May. And a couple things I want to highlight here. Well, first of all, let me just show you this picture. This little girl's name is Gracie. She has a form of childhood epilepsy. I think it's Dravet syndrome. And what's so powerful for the families that have kids with childhood epilepsy is that they've tried a lot of different medicines, and not everything works. Obviously, there's no cure, but it's about treatment. And so what many families have found with this Epidiolex is the name of the GW drug, is just amazing improvement in the quality of life. Reducing seizures by over half, or reducing their severity. And you can imagine how powerful that is when a 4-year-old is having 20 seizures a day. Okay, I recommend looking at this presentation on the GW site. I want to go to a few slides here that really stand out. Let's see what I want to show you here. I wanted to show you slide 5. Where did it go? So it's estimated there's 3.4 million U.S. patients with epilepsy, nearly 500,000 of them being children, and a third of these patients, have some sort of pharmacological resistance to different treatments. All right, a couple other good things on this slide deck that I want to show you. GW is based in the UK. Okay, so they're already invading Europe with different approvals. And this is not a fly-by-night company either. I call it a success 20 years in the making.
Okay.
So it seems like an overnight success, but they've been at it since 1998. Two physicians decided we're just going to focus on cannabis. And they got the first drug approved in the UK for MS in 2011 or 2010. That drug is still on the market, not approved here yet though. But it is going throughout Europe. You can see the European map here of approvals. One other slide I wanted to show you real quick. Oh, the pipeline. So this is what's key about growth ahead. So you can see at the top here, you've got Dravet syndrome and Lennox-Gastaut syndrome. These are the two forms of childhood epilepsy, obviously, approved. So this is Epidiolex. This is the drug right here. If Epidiolex gets approved for other conditions, then that just expands the revenue streams. Without not a lot of other R&D, this drug now, they call it label expansion. Okay, so what else do you need to know? You need to know that the second quarter results here just blew away expectations. They were looking for $45 million in sales. The company came in with $68 million for Epidiolex. So that caused the investment bank analysts to raise their estimates. I think Morgan Stanley, for the year, they went from an estimate of $168 million all the way up to $291 million, like a 90% increase in their sales estimate for this year for Epidiolex, which is sending estimates higher everywhere. The key here is getting insurance to pay. You need the payers, right?
Right.
93% of prescriptions are getting paid by insurance, which is very encouraging in a drug that's only been on the market for 6 months. I showed you the pipeline, talked about the history. So to wrap it all up, you've got the first FDA approved, you've got the history of this company focused on cannabis-derived medicines, the pipeline. Oh, and then the growth. Let's look at let's look at our estimates on the Zacks detailed estimates page. Here we're looking at 1,700% sales growth this year. Well, that's because they didn't have a blockbuster drug yet, so it's just launched, right? Mm-hmm. But even next year, you're looking at 100% growth. So you go from over 300 million this year to 650 million next year. And that is quickly turning the company profitable. You can see here where estimates have gone in the past, since their last report, from losing $5 to almost profitable this year, and then making $3 next year. Some estimates are as high as $6, $7, $8 for next year. And so it's kind of all over the place, but to the upside. And the last word on valuation is, let's say in the next 6 to 9 months, they crack the $500 million mark. Well, they're trading under 10 times forward sales right now. And analysts' price targets are north of 200, like let's say 220. That means they're willing to pay 12 times for this company. So that's what I love about this growth in this niche with this dominator.
Okay. We'll continue the excitement now with Ben at the end of the desk there. You've got a company called Chegg Incorporated.
Yeah, a little different than what Kevin just did, but it's a company whose tagline is, we talked about it beforehand, it's just a little too hard to pass up. It's a company that made their mark selling books and renting books. As people know, in college, textbooks are insanely expensive. College debt's been racked up to $1.5 trillion, and their tagline is saving broke students one book at a time. That's been their model. They're kind of undercutting Amazon in some ways by selling books online, but now they're growing into more of a service-focused business where they have tutoring service, test prep from everything from math to writing, and it's not just college students now. They're doing some high school prep. They're really targeting people who are making that transition from high school to college, to where some people, they're saying that some people get accepted to college because more people than ever are going, where then they have to take these remedial classes, what they're referring to as remedial classes going in at freshman year. So they're saying if you do these test prep services, maybe in the summer of senior year going in, you could get a leg up. And that's now where they're making a lot of their money. Last quarter, they made 86% of their revenue from services. It was up 30%. Overall revenue was up 26%. They now have 2.2 million services subscribers. That was up 30% as well. They're looking for some international growth because this services business is a much higher margin business than selling and renting textbooks is the basic gist of what's going on here. But I quickly want to just look at their website for anyone out there who just wants to know what if you look at their top tab, it's books, study, writing, math solver, tutors, internships. And then, as I said, they also have internships, job profiles. So they're expanding into this world of services, which you'll hear a lot in this digital age. So that's where they're expecting their growth to come from. And if you look, I talked about this before as well, they went from, in the summer of 2016, they were trading at under $5 a share. They're up over 500% since then. They're trading at roughly $41 this morning. So that big growth is there. They're blowing out that computer software services market, which has up 40% over 3 years. So this has been a massive growth company, but it doesn't really look like that growth is going to stop. If you look at our detailed estimates, our current third quarter estimates are calling for over 20% growth. Fourth quarter estimates, over 26% growth. Full year, we're at around 25%, and then another 20% after that. So some stability for this company that's also on the growth side. And then what's great as well is with this services business, which is much higher margin than they were originally selling in the early 2000s, mostly textbooks online. We're calling for roughly 42% earnings growth, and then another roughly 18% growth that following year. So some big growth in the bottom line. After they reported better than expected Q2 earnings, we've had all the estimates going in the right direction, especially for fiscal 2019 and 2020. And they've also easily crushed our bottom line estimates over the last 4 quarters, averaged 58%. So really, it's an interesting business that's kind of reinvented themselves on the fly. So it'll be fun to watch. And as we all know, college is expensive. So anyway, you can save a little money and maybe get ahead. It seems like a good business model for them.
All right, do you own it?
I do not.
Own either of these? Do you own Kevin's stuff?
Oh, I don't know.
Oh, okay. Kevin, do you own
We
either?
own GW Pharmaceuticals for both Taser Trader and Healthcare Innovators.
All right. Thank you both for that. Always more stock information on our website, Zacks.com. Get over to the homepage and start checking it out. With Kevin and Ben, I'm Terry Ruffalo.